Welcome to the StockMiner.com studios. I'm your StockMiner, Brian Johnson, and we roll sideways into the end of the week, to not only end of the week, but of course to also end options expiration. So the puts got their butts handed to them once again. We talked about this, if you were with me on Sunday, talked about the fact that what we've seen in the past has been that we get to an options expiration week and it looks like the market is ready to roll over. It looks like it's just on the verge of tipping over and absolutely falling apart. And then it goes up a little bit more. And so during options expiration week, I'm sure, I don't know, honestly, I've never done studies on this, haven't looked it all up, but I would bet you that there are a lot of people that decide to buy puts during the week or before, obviously a couple weeks before. I'm not one for buying options so close to expiration, but lots of people do it because they're cheap. So anyway, they get into these put positions thinking that, oh yeah, man, the market is definitely going to roll over next week or the following week or sometime before these things expire, and it never does. It just keeps crawling up and just absolutely wears them out. So I did it again this week. It just absolutely wore anybody in a put position out this week. Then it finished the week by moving sideways, which kind of even kills the longs. If you've got any kind of a long position, or if you've got calls that are not in the money, if you've got puts that are not in the money at this point, and this thing rolls sideways, that's the worst thing that can happen to you. They just bleed to death all day long before they finally expire worthless. So more of that as you see into the end of the week. But overall, I digress. This is a pullback. Still a pullback. Nothing broke here from the bull side. So we're hanging on to the neutral to bullish position, as I have been for how long now? Forever. Yes, there's a pullback coming. Yes, I think it's going to be violent. Yes, I think it's going to involve big red candles. Yes. But I can't tell you when, nor am I going to guess. I'm just going to wait for things to get broken. Once these lines have been broken, then we'll maybe have a better idea of when it's all going to happen, but I'm not going to rush into it right now. So, have I been hedging myself on the way up? Sure. I'd take a little bit of a short position here, short position there, whatever. Just use it as a hedge. Haven't made any money on the short positions, but that doesn't mean that I've stopped going long either. So I'm still making money on my long positions. I'm just not making quite as much because I'm hedged. Anyway, point being, I am still going to continue to play this thing to the upside. If this thing wants to roll upwards, have at it. I'll keep jumping in and I'll keep making it. It's what we saw all week long, a very slow, laborious move, though, to the upside. Okay, so looking at breaks above the 10,900 mark. We talked about breaks above the 11,000 mark. We talked about breaks above the 11,100 mark for entries. The 11,100, yeah, it really didn't make you much. It went up, came back, went up, came back. So it's really finding a hard time moving upwards. However, it's not finding an easy time moving downwards. So it's still got to be given to the bulls at this point. We're still moving up. Look at this. Remember I mentioned here? Okay, here we go. We're just moving up. So this thing can continue to grind. We're looking at these overhead levels, 11,200 to 11,250 would be the next kind of levels I'd be really keeping my eye on. Moved sideways basically the last 3 days. As you can see on the NASDAQ, though, it has been a monster. While the other indices were down or sideways for the day, the NASDAQ's just tearing it up. I think some of it has to do with, obviously, Apple's reporting next week. And this is why I don't short the NASDAQ. I've told you guys this before, but if you haven't figured it out yet, this is probably why I like to go long the NASDAQ as opposed to going short the NASDAQ. You really get your butt handed to you on the short side for the NASDAQ. So find something else to short. I wouldn't do it on the NASDAQ. But this thing has moved up and over and well above this overhead position now. So that is going to put, dare I say, some Elliotticians in a real quandary if the other indices decide to follow that. It's going to change things. That could be a big game changer because now this looks like, if you just want to break it down, this looks like a huge move to the upside. I know some are going to want to call this a C wave, but you know what? This is kind of indicative of a very large 3 wave as well. It could also be that. We have to take that into account. Have to be looking at that. I'll do a little bit more work on that over the weekend, so we can get back to you about it. For the weekly, also closing above this area. Remember I said a close above 2060 is what the bulls are looking for. Guess what they got? A close above 2060. we cross major areas like this, I always give the bears an opportunity to maybe pull it back down or whatever the following week. So I will again next week. Now that options expiration week is over with, I will do that. But it is what it is. At this point, it's a close above. SPX on a 60-minute here, still flirting with this blue line. You can call it above, at, or on, whatever. Doesn't matter. 1170 to 1180. That was my area to watch for overhead resistance. I said I did not want to play around in this area, and this is exactly why. Look what we did. We got above it, and then we went below it, and then we just kind of finished in it. So this was right where I kind of figured we might be by the end of the week, and that is just above this line, but holding just barely above the line. And as long as it holds here, it is still bullish. That is once again, we talked about it all the way up here. And if you guys can't recognize this pattern by now, and you've been with me for any length of time, 60 lashes with a wet noodle for you. This is a high base formation. And high base formations are typically bullish. That is correct. Bullish, if you said bullish, gold star for you. And those typically break up. So we will watch to see if it does resolve that way. Anything back above about 1185 is what we're looking at there. Then we're going to look at what level. Oh yeah, that 1196 that I've been talking about. That is the 200 on the weekly. So I also like that level up there. And well, I'll talk more about it this weekend. I don't want to get into it right now. But this is another level to be watching very closely coming into next week. The VIX on a daily, look what it did. Dancing around. Now we are still able to stay within this level here. Now the blue line is dropped, and we've opened up some space to the bottom, but this green line is there as well. We have a good, strong level of support down here, both the blue line and the green line. So closes below that are what the VIX players are ultimately looking for. Really, guys, there's just no fear. There's no fear down here at all. This level is not indicative of a market that's worried at all about a rise in the dollar, B, market crashing at this point. Can it change quickly? Yes. Look at these big white candles. But you know what? Until that happens, it just is what it is. There's no fear down here. There wasn't any fear back here. There wasn't any fear over here. There was no reason to really get in any kind of a panic mode with the markets in the direction they were going. Apple on a 60 is a monster. Continues to the upside. My break was above 30, what was it, 302 or something, 302.50 or something to that effect yesterday. Point being, look how it held the 20 perfectly. Moved sideways right into it and straight up from there. It's just textbook. So, huge move up in Apple today, up another $12. This thing is unstoppable. If you've been trying to short this thing, 200 lashes with a wet noodle. Shame on you. Okay, so a break above here, we call how many? I don't even know how many entries I called to the long side. If you've been following me for any length of time and you've not made money on Apple, and you've not made money to the long side on Apple, I don't know what else to tell you. I've done my best. I'm working for you guys, okay? I really am. I'm doing my best for you here. We've been nothing but bullish on Apple. I've been nothing but calling out entries to get long, usually on an intraday basis instead of a swing basis. But even so, look at the huge moves in Apple on intraday basis. It's getting tired, but as of right now, it's not ready to run out yet. I would expect to see a little bit more of this, maybe sideways action, maybe even a bit of a pullback into its earnings next week, but even so. By the way, I'm not holding over earnings. I had somebody write me and ask me about that. No, I do not hold over earnings. If you want to, more power to you, but you are gambling. You're not trading at that point, but it is what it is. If it's going to gap up, though, I would expect it to maybe get into or close to this blue line. So, coming into next week. Point being, look, move up, high base, move up. That's how it works. See how easy that is? Move up, high base. This one took a while. High base. It was a high base. I called it a high base the whole time, till otherwise proven. And it resolved upwards. Now a little high base, resolving upward. So it's still bullish on Apple. FAS, another one to play from an intraday basis. We got some breaks to the downside, giving some opportunity to play this thing. But you can see we did not hold the symmetrical triangle. Well, I shouldn't say that. Actually, we got the breakout of the symmetrical triangle, but this could have been finishing. Remember I talked about it. This could have been finishing a little 5-wave here. So we might have had a 1, 2, 3, sideways 4 with a 5. Maybe this is it. Maybe this is the top of this particular wave if you're an Elliott person, whatever. Point being, we're back below these areas here, giving us short positions back on the FAS. Did not fare well today at all. So the bank's still struggling in here trying to find footing. And FAZ did give us entries, okay? We got pushes up and above 13 bucks. Only for, what, 10 cents? You might have made 5 to 10 cents off that move above 13, but this is something to watch coming into next week for sure. I also had breaks above 1280 and whatever else. There were other opportunities to get in here from an intraday perspective. So you should have made a little bit of money on here. But I'm only playing it intraday. Look at this. Look at how violent this is. Okay, so we've had maybe a 1, 2, 3, 4, 5 move down. We could be starting some sort of a corrective wave or a new wave up or whatever. I don't care. It is what it is. I'm just going to let the charts tell me. We did get a break above the 20 here, and that was a good entry to the long side. So for those of you playing along at home, should have made some money on that as well. We had a great week, guys. There was good money to be made. I had a pretty good week of calling it out. We kept neutral to bullish, as I have been for the last few weeks. We didn't get breaks below any of my go short levels, so there was no reason to get short the market. Yeah, it was a good week of trading. Even though we didn't move a whole lot in the indices, that's why I said look to individual stocks. And that's exactly what we did. Now, to my friend, I have a gentleman that sends me comments every now and then. Zero Sum. Big shout out to Zero Sum. Okay, just curious as to why you don't include a dollar analysis with your index analysis. I mean, that is the exact driver of markets right now. So if you want to know when the market is going to go to poopy, he didn't say poopy. All you have to do is identify when the dollar will short squeeze. I totally agree, Zero Sum. I'm absolutely in agreement with you. But I cover the dollar on my subscribers list. So that's why I don't do it on my daily videos. Value added. I guess I've never mentioned that. I cover the dollar on my subscribers list. I also cover the Russells. I cover the FTSE, which is the FTSE. That's the overseas market. And then individual stocks as well. So there are other things that are on my subscribers list that I don't do for my daily subscribers. It's that whole value added type thing, you know. People want to think that they're getting their money's worth, and I think that helps give them their money's worth. But you're right. I do cover the dollar. I just don't cover it on the daily videos. So what a great transition you gave for me, Zero, though. Thanks, man. So if you'd like to try the subscribers video or the subscribers newsletter, try it. $15 a month, guys. If you don't like it after a month, you can quit. Whatever. So you can give it a whirl. I really feel there's more. That even if you never place a trade based on it, there is more than enough information in that thing over the course of a month to give you $15 worth of trading information. I put in a lot more trend lines. I put in more support resistance lines. I talk more about what I think is going to happen in the markets. I'm just a lot more in the subscribers video. So anyway, if you want to give it a whirl, try it out. $15 a month. Zero. Yes, I do cover the dollars. Just covered in the subscribers video. And I will see you guys again when? Yeah, this weekend. Probably Sunday sometime. Talk to you later. Have a great weekend. Bye.